Hey everybody, it's Randy Patrick here, Housing Bubble 2.0 news update. A little quicker video than expected. A lot of stuff happening in today's marketplace, and had a few requests to talk about some topics here. So we'll get into it right away. Things we're going to talk about today are the U.S. housing market raising red flags, no down payment subprime loans, and Florida foreclosure filings are skyrocketing, and they really are. So anyway, here's the scoop. So there was an op-ed via an author at Bloomberg.com, and I thought it was very interesting. Basically saying the U.S. housing market is raising serious red flags of what's going on. So basically, he's stating the fact that home growth is is entering into a cyclical downturn and likely to intensify as affordability issues worsen. So despite having a great economy, which apparently we do, at least measured by the gross domestic product, real home price growth is locked in a cyclical downturn. We've seen that before, obviously, in the last housing crisis. As again, home prices are cyclical, and we got to follow these things. But according to the minutes of the Federal Reserve from August 1st, the monetary policy meeting they had, policymakers are only starting to recognize the possibility of a significant weakening in the housing sector as a downside risk. So even those people who want to be bullish about the market are starting to see that things are changing. And according to NAR, our National Association of Realtors, the Affordability Index, so the ability for people to afford homes, is at an all-time 10-year low right now. So homes are the most unaffordable they've ever been in the past 10 years. Which leads us to, seeing there's still demand for homes, but buyers are on the sidelines with buyer fatigue, and they're waiting to see how all this plays out. So again, which results in a decline in the number of homes sold, which has a ripple down effect on everything that goes along with purchasing a house and getting services and furniture and all those great things that go along with home ownership. So also higher steel tariffs, less available lots in some cities, delays in securing building permits have all contributed to rising building costs, which means builders are building less and they're building homes that are more expensive, so the affordable housing market is not being taken care of, and that's where the number one issue is. And of course, we've also seen that as home builder profitability and volume shrinks, their stock prices take a hit as well too. So basically, again, it's tough out there. It's going to get worse, and if the Fed continues to raise interest rates, which they've planned on at least one more for this year and at least two for next year, you're going to see affordability remaining tough, and it's going to be very difficult for home prices to gain much traction. It's got to go the other way, guys. It's been up all this time. It's got to go down. That's the way it is. So that's what's going on right now. Now, of course, when you have a market that's tough like this, you move into lending, and lending is based on homeowners trying to get property. And over the past little while, we've seen it very difficult with rate increases, and we've seen the advent of more and more non-banks or the shadow banking community becoming forefront and originating loans to work in this marketplace here. So this was actually on CNBC's website the other day, and the reason why I'm doing the video right now is because a lot of people have asked questions as to what was going on here and can I explain it. So definitely going to give it a shot. So there is a group called Neighborhood. It's the Neighborhood Association or Neighborhood Assistance Corporation of America, NACA. So NACA.com. It's a group. It's really an advocate group for people to get mortgages and become homeowners, which is great. It's based on financial exploitation with America's Best Mortgage, and therefore there is this subprime, no money down mortgage, which is really great. So again, if you're looking to be a home buyer, this is perfect for you, right? No down payment, no closing costs, no PMI, private mortgage insurance, no consideration of credit score, no perfect credit required, interest rates below market. So this screams subprime, which is what it is. And the whole idea is that they're trying to stabilize neighborhoods through advocacy and activism, and really offering this to anybody who can qualify. So this really is a full documented loan, and apparently what they say is 90% of the people that go through this, are homeowners because of the rigorous documentation and qualification process. So literally, if you go to the NACA website, there's a 56-page, I guess you could say, purchase guide summary that you download, and you basically fill out and go forward from there. It's a lot. It's pretty intense. There's a lot of qualification, a lot of documentation. But what they're looking for you to do is go through a counseling and event process. So the whole idea, your sort of ways to home ownership is you're going to attend a workshop, and that was what the sort of article for CNBC was stating, is the fact that all these workshops are popping up across the country, you know, in Chicago and Atlanta, large cities, and they're getting thousands of people who were showing up to stand in line, some as early as 4 in the morning, to get into this process where they're going through this workshop, they're having an intake session, they're getting qualified, and this is all going through these 10 steps to get them into home ownership, which is great. Now, if you think about it, you know, this is a 30-year fixed rate mortgage, but it's below market value as well too. So if you think about it, you know, I don't have to bring money to the table to close. I don't have any down payment money. I'm getting a below market, I guess you could say, rate mortgage. I've got a lot, bad credit scores are fine. I don't have to pay appraisal costs or things like that. So a lot of these things are benefiting the homeowner, which is perfect. And the banks, the lenders are picking up the tab and all these type of things, you know, which is wonderful. But my issue with this is the fact that this is one more, I guess you could say, one more opportunity to have somebody purchase a home that has no skin in the game or no stake or interest in their home. Listen, homeownership is great, and it's wonderful to have a house and to live someplace and build equity and grow and build a family, the whole bit, whatever you want to do. But the issue is that we have people who have nothing to lose in this situation. So this is even better than renting. Renting, you need to have first and last months or first month and a security deposit, right? That's typically how a rental contract or a lease works. In this case, there's nothing. It's even less financially stressful than renting, as far as I'm concerned here. So you show up, as long as you're willing to go through the NACA process, which is quite involved. You do have to have. You'd have to pay to become a member, the $25 member fee that's paid every year. And NACA apparently has 48 offices across the country. They're not in every state. They apparently have 2 million members. So there's a lot of people who have become members of NACA that obviously don't have homes. And they say roughly 60,000 mortgages have been issued, and also they've saved or they've helped 250,000 people, I guess, with mortgage assistance or doing things to support them when they're facing foreclosure or not paying their mortgage. So which is great. What we don't know is how many people have lost homes that were NACA members. There's no statistics on that. And also with the qualification process. I mean, you have to go through all the qualifications with respect to the documentation, et cetera, which is quite onerous. But also, you have to be eligible. What I mean by eligibility is that no member of the household can have ownership interest in any other property. What I mean by that is, you don't have to be a first-time home buyer, but you can't own a property and then say, I'm going to buy a NACA home, unless this property is being sold and you can prove that and you're buying a home with a NACA mortgage. All right, so that's the way it works. No investment opportunities, things like that. It really is based on, I can tell you right now, down payment none, closing costs none, the lender pays, interest rate below fixed rate, 30-year or 15-year terms. You can buy down your rate if you want. Application fee none, points and fees none. Property type single, family home, condo, multifamily, purchase and rehab. So if you need to buy the house to rehab it to live in it, you can do that as well too. No private mortgage insurance. It's a heck of a deal there. You occupy the home for as long as you have the NACA mortgage. They actually will place a lien on the home, and apparently if you violate some of the NACA requirements, they can demand a $25,000 payment from you and foreclose on your home, which is interesting. So I don't know how that works. There's no information on that online. But again, so they're strong-arming people, I would imagine. But again, I don't know about this program. I'm going to find out about it the next couple of weeks. I'm going to go visit the NACA office in my neck of the woods here. But it's interesting, though, that they do these type of things. Now, also, once you go through this whole process, NACA will assign you a real estate agent, or the real estate agent you have can work with you as long as they go through the NACA process and get approved. Now, of course, how these groups always make money, and there's other groups that do this as well too, not just NACA, is that the real estate agent who acts as the buyer's agent for the buyer is going to give NACA a portion of their commission. So roughly a third. They're basically saying if you're earning 3% commission on the buyer's side as a real estate agent, you're going to give 1% to NACA. So that's how NACA makes their money. Besides memberships, they make their money through realtors who are going through the process with their buyers. And again, there's a qualification process. I've noticed that NACA will send a NACA home inspector out to do the home inspection. I'm assuming that the home inspector is going to do something with that as well too. So there's some contribution. So that's just how these things kind of work. So the point I'm trying to make though is that as we go forward with housing and we see the fact that we're unaffordable, interest rates are rising, people are going to be looking at alternatives to get into properties with paying less down and trying to sort of compensate for these high interest rates. This is the way it is. So we see the 3% picking up the pace. We see the advent of the shadow banking industry, the non-banks, right? The Quicken Loans, those type of banks that they're not really banks, they're not deposit banks, they don't have deposits, and they're doing their mortgages a little differently. There's no backing behind them. So again, those are more fluid, but with respect to there's more alternatives for people to go and get a mortgage, which really ends up being riskier. More subprime going on with subprime lenders and stuff like this. So again, I go back down, the less you have in the property, the less equity, the less stake in the game, the less attached you're going to be to your house. If something does happen, it's really easy to walk away. Again, you paid nothing for this property. You paid less than you would to rent a place, and you've got a mortgage, which is really kind of neat as far as I'm concerned. All right, which again, NACA.com, if you want to read all this stuff, it's there. They're a little bit of an activist group as well too. They have a huge history from 1988 about what they've done and all these things they've accomplished to get to the point where they are today. And it's just check out some of the videos, you can see what's going on there. But for example, I know that just looking quickly, there's 4 or 5 in the next 2 months events where at a library, a community center, that you can show up and you can go through at least the qualification workshop. And part of the NACA membership is the fact that once you're through NACA, you agree that you're going to participate and help to run and work some of these memberships and do voter registration and do other outreach, community events, whatever, to bring more people into NACA. That's how they sort of are working their their opportunity here. So which leads us to foreclosure filings. And I guess you could say that foreclosure filings are up, and one thing I want to qualify right here is the fact that I can talk about foreclosure filings across the country in a limited capacity. What I mean by that is, I get statistics from Added Data Solutions, other locations, and that's great, but we're hearing it on a monthly basis and a quarterly basis, and we're getting spot information, which I try to disseminate and tell people about. Now, when it comes to Florida, I can get a lot of information because it's more readily available at my fingertips, so I can give you a lot more detailed information. So we're going to talk about that today. One of the things that I've done over the past few days is do some analysis on foreclosure filings, and this sort of dovetails with affordability issues, moving to subprime and shadow banking type loans, which are riskier, going to foreclosure filings. So what we see in Florida is a significant increase in foreclosure filings compared from 2017 to 2018. We're talking big time. I just did a few of the metro locations their counties are located in. So where I live in Hillsborough County, we're 44% up from last year's, And I took the entire 2017, volume, and I'm just comparing what's been filed for the first 9 months of 2018. So, we're up 44% from last year, and we've still got 3 months to go. So that's going to be standard for all the things I'll talk about now, is there's only 9 months comparing to 12 months worth. So things will rise even more. Pinellas County, which is next door, St. Petersburg, Clearwater, 54%. A couple of locations south of us, Manatee and Sarasota. Manatee actually had slight decrease, but again, it'll pick up and go over top, and Pasco as well too, like we're talking single-digit decrease just because they're slower counties. But again, 3 months more to come. They'll be positive with the growth. Sarasota 10%, Polk County 63%, Duval County, which is where Jacksonville is, 95%, Lee County, the Fort Myers area, 54%, Broward County 300%. Okay, Miami-Dade was the only county that actually showed a decrease, but their volume is so high that it doesn't really matter. What I mean by that, they're probably going to get to at least 5,000, if not more, individual filings for the year. Orange County, the Orlando area, over 50%. So we're talking a huge number here. If you extrapolate this and do a 12-month based on the numbers, it's going to be high, over 50% across the board here. And these are just some of the metro locations. I did not even talk about some of the interior Florida, didn't even go up to the Panhandle. This does not really include any of the most recent hurricane stuff, because stuff in the Panhandle, it's too early, there's no effect yet on the numbers. And I can tell you that a lot of these locations were not affected by Hurricane Irma that came through last fall. So a lot of the stuff that's going on now is at different reasons that's going on in Florida. So again, I look at Florida as the Wild West of real estate, and I'm not too sure what's happening in your location, your metro, your county, your state, but again, it's going to start happening. I call this the crisis before the crisis. So this is going on now. It's under the radar. It's part of the shadow inventory. Nobody is looking at this, acknowledging this, going after this as as an opportunity. I can tell you and get more deeper into those statistics, but it's sitting there. So this is building and building and building. And think about this. If we're coming off, this is the sort of dichotomy of the market. If we're coming off a summer where we had 11.2%, over 2006 peak value in the Case-Shiller Home Price Index, yet we're seeing locations that are having 50%, if not greater, increases in foreclosure filings. Something is not right here. So the statistics don't lie. It's just the reasons how we got there are very unclear. I mean, I kind of know, I know exactly what's going on, but it's going to be different for each part of the country. But realize that this is happening. It's not talked about because we see some very high-level macro numbers across the board. This, obviously I have access to the data in Florida, so I can talk to you exactly what's going on in Florida, which is something else. So again, just keep this in mind that this may be going on in your own backyard and you are not aware of it. It's a precursor to more issues that will happen in the near future. All right, guys, appreciate your time. Look forward to speaking to you in a couple days. And if you need more information or want to talk with us, you can drop me a line, Randy@luxuryshortsales.com. See you later.